What's up, everyone? Welcome to another Cointelegraph live stream. My name is Jackson. I will be your host for today. The title of today's live stream is How Wing Attracted 200 million TLV, or total locked value, within a week. What's up, everyone? And just to explain that title a little bit, total locked value means the amount of money deposited on the platform. So the sponsor of today's live stream and the star is Wing. Wing is a credit-based cross-chain DeFi lending platform. If you don't quite understand what all that means, we're definitely going to get into that in a little bit. So today's guest and representative of Wing is Erick Pinos. Erick is also Ontology's America's ecosystem lead and the president of the Blockchain Education Network. Erick has a Bachelor of Science in Management from the Massachusetts Institute of Technology, where he was the president of the MIT Bitcoin Club and a researcher at the MIT Digital Currency Initiative. How are you doing today, Erick?
I'm doing good. How are you?
I'm great. Thanks for coming on the show. So if you guys are interested in Wing, make sure you check out their website in the description below. And if you want to read more about their white paper, you can just Google that. If you guys are enjoying the stream, make sure you hit that like button and subscribe to our channel so we can bring you more awesome content. And I want to remind you guys that this is an AMA for you, the viewers. So if you have any questions for Erick, make sure you write them in the chat. I'll be reading along the chat and I can ask them directly to Erick. So if you have any questions, just write them there. So let's get into it. As I mentioned before, Wing is a credit-based cross-chain DeFi lending platform. So how would you reformulate that definition for someone who isn't very familiar with those terms, Erick?
Sure. So there's two components. There's two vocab words there for everyone to learn. So one is cross-chain, the other is credit-based. So the cross-chain element just means that it's a lending platform. Wing is a lending platform that works across different blockchains, or rather it works with assets from different blockchains. So if you go to the Wing lending platform on wing.finance, you'll notice that not only can you lend ONT and lend Wing, which are two assets on Ontology, you can also lend USDC, wrapped Bitcoin, which is WBTC, and Ren Bitcoin, which is Ren BTC. As well as Ethereum. And so how are you able to do this? We do this with a cross-chain solution called Poly Network, which is developed in collaboration between Ontology, Neo, and Switcheo. And what that lets you do is it lets you swap your assets from the Ethereum chain onto the Ontology chain. So you can wrap USDC into PUSDC, you can wrap Ethereum into P Ethereum, wrap Bitcoin into P wrapped Bitcoin. And by those assets now, they're on the Ontology chain, so you can lend them out as well. You can borrow them as well. So the cross-chain is just our intention and Wing's intention to work with different blockchains so that users can lend whatever asset it is that they like the most, or borrow whatever asset they like the most. It's very interoperable. In the credit-based component, so the credit-based means that it utilizes a credit score. So right now, a lot of DeFi platforms are collateralized based. So you need to put up over a collateral that's over the amount that you want to borrow. Like if I want to borrow $5,000, I need to put up $10,000. And we feel that really limits the use cases for DeFi. It makes sense why we would need this if we're looking at a purely anonymous system. But if we start introducing elements of identity and elements of a credit score, then what you're able to start enabling on these DeFi platforms is under collateralized lending, where people choose to essentially stake their reputation and reveal their credit score. And the better their credit score is, the credit score is made entirely from on-chain data, like transaction history, lending history, how many times you've been liquidated in the past, are you a good borrower, are you a good lender? And we could also integrate components of a traditional credit score. So like maybe you could plug in your bank account information if you so choose. And the point of it is to get access to better rates. So you would get access to better rates and you'd be able to under collateralize your loan. So now, because I've made my identity known and because I've chosen to opt in with my identity, I can say, for example, take out $10,000 and I only have to put up, say, $5,000 in collateral. So that changes the game because now you can take out actual loans from the blockchain.
Cool. That was a really comprehensive overview. So I just want to remind everyone who's watching, if you have any questions for Erick about what Wing is or what DeFi credit-based lending is in general, make sure you throw them in the chat. Got a simple question from Constantino Esper, who's asking, is Wings the code of this token?
The ticker? No, the ticker is Wing. So there's
Yeah.
like, I think there's like 3 of them. And some of them are dead, but the Wing is WING, singular.
Singular. Remember that, guys. This is just Wing. I made this mistake actually. I looked up Wings, and it's actually kind of funny because there is a similar project that is also a DAO that's called Wings. So make sure you guys are Wing, singular. So the title of this live stream is, how Wing attracted 200 million TLV, total value locked. What is that process? How do you lock value into a platform, and where is that money coming from? Do you see it, is it mostly retail or is it institutional money? What kind of money is being locked into your platform?
Yeah, well, I think the first thing that we noticed was that a lot of the people, what we thought, or at least what I thought would happen, was that miners would start unstaking their ONT to then participate in this, because the first group is the people with ONT, right? And so it's someone who already has ONT. And what ended up happening was a lot of people had free floating ONT that they just kept in their wallets. Normally, what you do to put your ONT, you can choose to stake it, but in staking it, it helps secure the network because you're building up these nodes and you're helping these nodes get stronger, and you're voting with your stake, like which node you want to participate in consensus. And then, you earn a percentage of the fees as well. But what I thought would happen was I thought people would take it out, because the thing is that in order to do that, when you choose to stake, you're locked in for at least 2 consensus rounds. So it takes like about a week or so if you want to unstake. So for a lot of people, they didn't want to make that kind of commitment. So what ended up happening is that there was a lot of free floating ONT just sitting around. And when we announced the DeFi platform and we opened it up for early deposits, all of that free floating ONT, people started locking it up into the platform because you can withdraw at any time. So it's a very different profile, the people that choose to stake and the people that choose to participate in this lending platform, because there's a different lockup period. So that's the first thing that we noticed. And then the second thing that we noticed is that there were a lot of people buying ONT off the market in order to participate in the lending into the deposits. So that's where the majority of the total value came from the beginning. And then, early on, it was the team really hit it early on with the Binance Launchpad announcement, and then some marketing with other AMAs, and the earlier live stream with you guys. So it really helped get the word out there, and I think it helped get those deposits in early and that total value locked.
Yeah, if you guys are curious about what live stream is referring to, we had a live stream, I think, was it last month or something?
Like a few weeks ago. I feel
a few
like
weeks ago. Yeah, a few weeks ago, regarding identity solutions. So if you're interested in that, you can check it out on our YouTube channel. We've got some questions in the chat already. Dumontisco is asking, can users withdraw funds anytime they want? I think you might have answered this question just now.
Yeah, users can withdraw any funds at any time that they want, and the lending and borrowing features are live now too. So that's something like I feel really good about, is that the product is live. For a few days, it was just like staking and depositing, but there wasn't really that much you could do with it, and the team was really focused on getting the lending and borrowing live. So now that's live. Now you can deposit and use as collateral, like your assets, and you can actually lend it out, and you can choose to borrow against it. So there's more like economic activity. There's more economic activity, and there's also real cash flow now in the platform, because people that are borrowing are paying the interest to the people that are lending. And there's also an insurance pool. So if someone doesn't want to get involved with lending or borrowing, maybe they want to get involved with the insurance pool, which is you earn an interest rate or you earn a rate for providing your assets to the insurance pool in case something goes wrong, or in case a lender isn't able to get their full payment back from the borrowers, which becomes especially useful once the credit score gets integrated and now there's under collateralized loans. So that's an important piece of it. And so, it's not risk free, right? Like that's the issue with deciding to do these things. So you really have to assess your own risk tolerance, and to know that like the reason the wing is being distributed to the lending pool, to the lenders, to the borrowers, and to the insurance, the reason it's being distributed is because there's a risk associated with it. So this is kind of the reward for being willing to take on that risk and help the platform grow, because these are things that the platform needs. The platform needs lenders, the platform needs borrowers, the platform needs insurers. So this is kind of like the new incentive structure, the mechanisms that you see across the DeFi projects as a whole, is the DeFi projects are offering up these tokens as a distribution mechanism to the participants in the platform, to the people that are actually using the platform, the people that are taking the risk by providing the liquidity to the platform.
Gotcha. So in answer to your question there, Dumontisco, I think it's a soft locked. It's not really locked up.
You can withdraw at any time. It's not like staking where you have to like wait like 72, except for the insurance pool. If you put it in the insurance pool, it's a 72-hour lock. But it'll tell you, there's like a disclaimer before you actually go through with it.
That's good to know. So we've got another question coming in from LA Millen, who's asking, does Wing require a credit score? And I think you've touched on this credit score a couple times already. Would you mind going further into it?
Yeah, so Wing technically does not require a credit score. The credit score is an opt-in system. So there's two separate pools, and there can be many pools, but to start, there's two pools. And so the first pool is called the Flash pool, and the Flash pool is a typical over-collateralized pool. So there you can just lend your asset purely anonymous, and you can withdraw, I think, like up to half of the asset. That's the safe max, right? If you withdraw more, then it gets a little dangerous in case the asset price drops, and you have to consider like the chances of being liquidated to cover the cost. But that's just a typical over-collateralized lending pool. You can just go and participate in that system. When the inclusive pool comes out, which is the next pool, that one will have a credit score element, so it will have the under-collateralized loans. And so it's an opt-in system, right? If you want to opt in, you can opt into that to mint your credit score based off of your transaction history, and then use that credit score to get access to the pool. Or you could choose to continue using Wing as you want in the over-collateralized pool. So we give users the option.
Cool. Thanks for that. So, I'm just curious, where does this credit score come from? And how does it work within like this decentralized framework?
Yeah, so the credit score comes from the O score, that's the solution that Ontology is providing. And so it's built off of OntID and the verifiable credentials for OntID. So essentially a user who wants to use the credit score can create their credit score by using this application, right? By going to when it's live, you'll be able to like go through the whole process. But it'll create the credit score based off of your transaction history. So it'll look at, how much balances you have. It'll look at how your interactions with the Wing platform in the past, like in the collateralized pool, like how many times have you loaned things out? How many times have you borrowed it? And have you gotten liquidated, right? So like, have you failed to pay back any debts that you had to like get liquidated for? And it takes those items into consideration, and that creates the credit profile. And so that credit profile is then what's used to make the decisions like, okay, is this person a trustworthy borrower? Can this person be trusted with borrowing more than what they put in? And then it makes that decision based off of that. And I mean, we want to expand it. What we'd like to do is we'd like to also include credit data or transaction data from other blockchains. So, as mentioned on our identity call, the thing about OntID is you can bind it to addresses that are on other chains. So someone can have an OntID profile that exists on Ontology, and they can bind it to their Ethereum address. And now both their Ethereum transaction history and their Ontology as transaction history can be included in the credit score. So it can measure, or it can track like my borrowing history and my liquidation history on Maker or on Compound or on Av. And then those things can be included in the score. So even if maybe I'm a new user to Wing, I'm already coming into the system with a credit score from previous DeFi products that I've interacted with. And so that's how you would, then take it. And then, when you actually go to the pool, it says, like, okay, do you want to share your score? And then, yes, I want to share my score. And then you share the score, and then you can see what kinds of rates you qualify for.
Gotcha. And when will this go live?
I mean, the hope is late Q3, early Q4. We want to get it out by 2020. Right now, we're really trying to just grow the Flash pool to have enough of a size, and to have the insurance pool be a sizable amount that we can launch the next pool with confidence. It's a big step to go from over collateralization to under collateralization. No one has really done it yet. I really like what Aave is doing, and I think that they're making a lot of great steps to it, like credit delegation. And I really like what Teller is doing, and they're doing a lot of things with traditional credit scores. So it's definitely something that we're all moving towards as an industry, which is good. But I mean, it's very much like cross-chain, right? It's like it's a big leap because now you're going from not trusting anyone and everything being super anonymous to now there's an element of identity and there's an element of trust. So it's definitely something we want to roll out slowly, but we definitely want to roll it out within the next year. We want to have some kind of experiment out.
Okay, cool. I'm going to take another question from the audience here. Yumi is asking, do I gain more wing by locking some for 72-hour as insurance? And is there any risk by depositing as insurance?
Yeah, you can look at okay, if you're interested in the rates and you want to look at it for the rates, you can look at the rates at wing.finance. That's when you're actually interacting with the platform, it'll show you all of the different rates that you can earn for lending these different assets, for borrowing these different assets, and for insuring these different assets. I think usually the insurance APYs are higher because insurance is the most valuable service that you can provide, and also it's the fewest amount of people doing it. But there is a risk to it. The risk is that if there's a lot of liquidations on the platform, or there's a lot of like bad debtors on the platform, then it's going to pull from the insurance pool. So when you put your funds into the insurance pool, what you're essentially betting on, that the platform is that there's going to be good actors in the platform, or not that there's going to be that there's going to be good actors in the platform, right? So you're betting on the growth of the platform. So it's like you're taking like a leverage long almost. So that's the consideration to take if you're considering the insurance pool. The APYs are higher, but the risk is higher. If you're lending, right? Like you're just lending it out, and you'll get paid from the insurance pool if the borrowers don't, right? That's like kind of the ecosystem there. So you have different people coming in, providing different valuable services to the ecosystem, each with a different risk associated with it. So look at the risks and look at the risks associated with it, because there's no such thing as free, right? Like if there's an APY associated with it, and this goes for any DeFi project, if there's an APY associated, look at what the catch is and look at what the risk is that you're taking. Like there's a lot of people that are putting all of their funds into like Uniswap pools because of like the returns, or like Uniswap pools or whatever, the sushi swap, that whole thing that happened, but they didn't realize about impermanent loss, and that's why they incentivize those pools, because they know that people are gonna there's the risk of impermanent loss there. So definitely be aware of like all of the risks that are associated with it, and it's like why is this thing incentivized, right? Like why is there a reward associated with this? What are the risks that are associated with it?
Yep. Moral of the story: do your own research. So we've got another question from Ellie Millen, who's asking, what do you think as the market matures, will decentralized lending services be sourcing more dead capital from around the world?
I think so. I think that a lot of I don't really know what debt capital means, but I guess, does that mean like
I'm not entirely sure either. Maybe Elle can clarify that.
Let's see if it clarifies it. I think it sounds like it means sitting capital, right? Like if you just have money sitting in your bank account, or institutions that just have money like in savings account or like in bonds. I guess that's what debt capital means, but they're definitely, I think there's a shift that people are seeking out higher returns, and they're seeking out to be more risky with investments. And crypto is becoming almost less risky because it's been around for a long time. The name is becoming more common. People are starting to trust it more. There's big brands that are legitimizing it, right? Like the MicroStrategy investment into Bitcoin. So I think that, there is a lot of capital that's entering the space. And even the capital that's entering the space, right? Like the riskier capital doesn't necessarily want to just be in Bitcoin, or just holding Bitcoin as an asset, but they want to take their USD and put that to work. And the way that you put your USD to work within a blockchain ecosystem is by lending your USD, because you lend USDC on Wing, and you can earn an APY from it, right? And so the risks there, there's still risks associated with like the platform itself, but in terms of like the market, USDC is pegged to the value of USD. And there's also the risk that USDC is made by Coinbase, so you're relying on Coinbase to be trustworthy. But I think for institutions, it's the risk profile of the institutions, and so it's a different kind of risk, like providing stable coins for lending than it is providing Bitcoin or just holding Bitcoin, because like one's market risk, the other one's like more like platform risk. But overall, yeah, I think there is more capital coming into the space, and I think they're especially going to be more interested in it as an asset class.
Mm-hmm. She also asks, what types of collateral types are available now?
So right now, the collateral types that are available are the wrapped Bitcoin, the REN Bitcoin, and the USDC and Ethereum. And these are the pegged values, the pegged versions of each. So like what you'd have to do is you'd have to have your MetaMask address, and you'd have to have your Cyano wallet, which is your Ontology address. You'd have to have both of them installed in your browser, and then on the Wing platform, if you have both of them installed, you can do a swap where you can wrap your tokens from one to the other. And I just did it yesterday. It was like really cool because you can take your USDC from your Ethereum and just convert it over, and now it's like USDC, but it's wrapped on Ontology, and you can send it around, and the transaction fees are like half a penny for USDC, and it's just like, oh, this is so much better. Like I don't have to worry. Like it was so much like having to, every move that I made like on Ethereum has to be so calculated because the gas fees will quickly eat up like lending it, borrowing it, sending it over here, sending it over here. But Ontology, I was just like, whoa, let's send this around. But yeah, those are the collateral types, and there's going to be more collateral types offered in the future. There's actually voting happening right now for the next collateral type that we should add. So if you want to vote on that, and if you hold Wing, you can vote on that at wing.finance/vote. And I mean, the choices are like Wi-Fi, synthetics, Kyber network, Uniswap. I think the Uniswap coin is leading the polls right now. But basically, that's going to look the same way, that you can wrap that token into the peg token on Ontology and then lend that out.
Is there a minimum amount of Wing needed to vote?
I don't think there's a minimum amount of, no, there's no minimum amount of Wing needed to vote. There's a minimum amount of Wing. There's the threshold of Wing that has to be hit to pass the vote. But I don't think that there's a minimum amount of Wing to vote. I could be wrong on that though. It'll spell it out in the proposal. If you go to like wing.finance/vote, it'll say like any requirements that are needed.
Okay, cool. So, I mean, we've been talking specifically about Wing so far, but I mean, why is DeFi credit-based lending important to the growth of the DeFi space as a whole?
Yeah, so I think we touched upon it earlier, that I think a big thing with DeFi right now is that it's a lot of collateralized services that rely on, it's DeFi relies on collateralization because a lot of it is anonymous. So because you don't know who anyone is, there's no trust. So you have to say, okay, over collateralize. You always have to put more in than you borrow. And there's a limit there because that's a very specific type of loan. It's like, if I have to put up $10,000 to borrow $5,000, that cuts out a whole lot of use cases. Like, in most cases, like if I'm trying to say like take out to pay for his tuition or pay for a car or pay for a business, like a small business loan, why would I put up $10,000 to borrow $5,000 if I already have the $10,000? Right, so it kind of limits the use cases. I think most of the use cases now are for like risk exposure. If someone wants exposure in a different asset but doesn't want to lose the first asset, they can lock up the asset and borrow against it. But what we want to push towards is all these other use cases for loans. Like I can go to the blockchain with nothing but my credit score and maybe a little bit of collateral, and I can borrow out more at a better rate than a predatory loan company, and I can actually use that loan in the real world to pay off a mortgage or pay for tuition, or start a new business, use it as a small business loan. So, or like micro loans, like in third world countries, like farmers loans. Like there's all the use cases around there. Right now, it's a lot of like DeFi degenerate gambling, like people just shuffling money around, like trying to get it into like the next thing. We're really trying to take it off into the real world by being more inclusive in that way.
Gotcha. And so what would happen before I ask this next question, I just want to remind everyone who's watching, if you have any questions for Erick about Wing or DeFi in general, make sure you throw them in the chat so I can read them off to Erick here. We've had a bunch of great questions so far, so please keep them coming. I'm really enjoying reading them. So my next question is, what happens if like a March 12th kind of Black Thursday incident happens? I mean, we saw MakerDAOs, like millions of users of MakerDAO got liquidated off of that flash crash. What's the possibility of something like that happening to Wing?
Yeah, well, I think there's two elements. I mean, the first one is the keeping an eye on the liquidation rate and the ratio, and always making sure that you're above a certain ratio. I think there's some interesting tools that are coming out now that can help automate that. And I know that on Ethereum, there's some really good options, like InstaDApp kind of is really cool, and it's been an inspiration that you can, like, as the asset value is going down, then it'll automatically just feed it more of the asset in order to keep the liquidation ratio above from being liquidated. But that's only one step of the thing. The other thing is the insurance pool, and then in that case, like, it could activate the insurance pool, but that's a risk to the insurers. The insurers would, if someone's participating in the insurance pool, you're essentially saying that, like, in the event of a black swan event, I know that I'm betting against it, right? It's like, what's insurance? Like, insurance is you're betting against something happening, and then you get the interest payments in return, right? So it's just like the different players of the ecosystem. It's like we have mechanisms to help it, but at the end of the day, right, like, there's participating in the system has the inherent risks, and that's why there's the interest rates, and that's why there's the additional Wing token distribution on top of it, is the reward for those rates. So I would say, like, it's just in general, like, the investment principles in general is like, don't lend out everything that you have, don't invest everything that you have. It's just a small part of your portfolio. It's just a small part of your bank. Is like you're using these services.
Gotcha. And we've got a question earlier from Dumontisco, who's asking, do you expect that 600 million TVL total value lock challenge will be successful?
I think so. I think especially as we start adding new collateral types, because there's a lot of people that want to lend their existing collateral, right? Like, the people that have uni and they want to lend their uni, or there are people that have Wi-Fi and want to lend their Wi-Fi, the synthetics, and want to lend their synthetics. Especially because I think that most of the like, we're kind of past the whole yield farming thing. I think so. So now people are thinking, like, all right, well, how do I put these assets now to work for me? Or, like, what else can I do with them now that I can't just, like, throw them into this thing to yield this food coin? So what we're aiming for is more like, sustainable, providing liquidity, providing to the supply pool, and providing to the borrow pool, or, like, having more borrowers in that. So having more collateral types is definitely going to help get that TVL up, because not everyone wants to convert into Bitcoin or convert into Ethereum or convert into ONT just to provide that supply. So that supply, that TVL, is coming entirely right now from ONT, from Ren Bitcoin, from Wrap Bitcoin, from USDC, and from Ethereum. So those are just 4 assets. Those are just 4 assets, 5 assets. Those are just 5 assets.
Gotcha. Again, Nick, if you guys are enjoying the show so far, make sure you hit that like button, subscribe, check out Wing in the description below. And if you have any questions for Erick about Wing or DeFi, just make sure you throw them in the chat and I can ask them directly to him. You said that the yield farming, you believe the yield farming is kind of over. Why do you believe that?
I think that there's a certain threshold that we hit with the number of new yield farming scams that are coming out per day. That was, like, very reminiscent of, like, the ICO days. Like, there was that certain point I think we all kind of realized, but none of us wanted to admit to ourselves that it was here. There was that certain point where there was just so many new ICOs a day. If you look at, like, ICO drops, there's so many new ICOs in a day that you just, like, knew somewhere deep down that, like, oh, okay, this is it. Like, there's no way this is gonna keep going. And I think we kind of hit that point. I think we hit that point, because there was a period when it was like kimchi and burger and cake and, like, all of these things coming out in one day, and it was like, oh no. So I don't know, you know, like the market itself, how's the market going to go? I don't know. I think DeFi is legit, and I think DeFi has some incredible projects that we're gonna do a lot of good for the world. But I think that like it was definitely got way too egregious with like all of these food coins and all of these things that people could just throwing their money into to like try to make like a quick return, and they don't realize like where the APY is coming from. And there were a lot of rug pulls and a lot of scams. I think that people are now, if someone were to launch one now, because there's still new ones being launched like almost every day, but every day, like multiples being launched every day. But I don't think they're getting as much attention as they were like a couple of weeks ago, or even like last week. So that's why I think that it's kind of coming to an end. That I think like enough people got either rug pulled, or a lot of people like realize that you're not actually getting the returns that you think you'll be getting. That now the new ones that are coming out, because there's like more and more. Like I just saw like a couple this morning. That was like, I think I saw it and I opened the site and it was another one of the Yam clones. Like it looked exactly like the Yams, and I was like, oh no, I'm so sick of this layout. Like I'm so tired of this layout. I've seen it so many times, but I don't see it being talked about as much. Even though they're saying like we have 3,000 or 30,000 APY, like whatever. So I think that people are kind of moving on from it. I don't think people are like as quick to like, oh, okay, here's the next one. Let me put my money into it, which is kind of how I was like a few weeks ago. A few weeks ago, it was like, oh, sushi, here we go. Okay, oh, kimchi, all right, move it over. Oh, now pylon, all right, move it over, and it just kind of kept moving it over to the different ones. Yeah, I don't think it's happening as much anymore. Maybe it could come back, but I think if for it to come back, it'd have to come back with a different thing, like what happened with the meme and what happened with all of the meme forks that happened yesterday, that now instead of like yield farming, it was like airdrops, and it was the Telegram, sign up for the Telegram groups and get the airdrops. But even that one kind of seemed like only lasted a day. So I don't know if that was like if that was a full phase. It was kind of just like a day thing.
Mhm. Yeah, it's definitely interesting. Maybe people are just kind of full on the buffet, if you will, of food tokens. So maybe we can talk a little bit more broadly. You know, how does the DeFi credit-based lending system differ from centralized lending systems? I mean, are DeFi lending systems like following the same sort of path of traditional finance, just in like a decentralized way? Like what kind of advantages or disadvantages are happening there?
Yeah, I think that there's the advantages is that it's like less bloated. So rather than having like all of these people involved in the, you know, if you're a bank and you're borrowing people's money, you're getting people to deposit their money and then you're lending it out, then you get the percentage, or you get the fees, right? And then you pass off a percentage of it to the users. But in a DeFi platform, it's a DeFi lending platform, the users are putting their funds into a pool, and then that is getting lent out, and then those people pay it back, and then that money, like those fees, go directly to the lenders. So the rates are higher because the lenders get that money directly. So it cuts out like all those people that are in the middle of the process that are kind of manually doing this and also taking like higher cuts. And instead, it's smart contracts that are handling this kind of like aggregating together the supply pool and aggregating together the lenders. So that's one thing, right? It's like you're taking a lot of these financial structures that normally were operated by people manually doing these things, and you're putting them into code. So the code can do it, and the code just executes it, and then you have the people on both sides. And I think the other thing is that I forget what the question was. What was the question? What were we talking about?
Oh, we were comparing centralized lending platforms to decentralized lending platforms, kind of talking about the advantages and disadvantages of them.
Yeah. And the other, okay, so I remember the other thing. So the other thing is, now this is related to the identity component, right? It's like, I think that when we say credit score, it definitely scares a lot of people. It's because they don't want it. Like, oh, a credit score. Like, that's what DeFi is not supposed to be. But I think that really, when people don't like, when they say that they don't want a credit score, when they don't like a credit score, it's because like the concept of a credit score has been hijacked and has been like so messed up to this point. Because if you have like a traditional credit score, especially in the US, that's not a number that you control. It's a number that's made about you based off of data that companies collect about you. Like Equifax collects this data about you. They make a score, They tell you that this score is important. They charge you money to see your own score, and then they get hacked and they lose all this data that they've been collecting about you. And then it's like, oh well, we got hacked. And then you can't, right? Like, this score controls your life, and you don't know what it is. You have to pay them to see what it is. You don't understand how it's made. You have to pay for a third-party service to tell you and give you guidance for like how the score is calculated and how to improve it. And anytime you submit it to be checked, it hurts your score. It hurts your score to look at the score. It hurts your score to get the score sent to a credit. So it's like, what is this system? Like, you have no control in any step of this process, and you could, like, go your whole life not even knowing that you have a credit score. Well, I mean, you need to use it, right? So you would know at some point, but you could go through like the first couple of years of, say, college, and when which is at a time when people don't normally like need their credit score except for taking out student loans, but you might not even know that you have one, but they have one about you, right? So it's like, that's the thing. It's like, you never set it up. You just kind of automatically have one as soon as you start interacting with these financial services. So we're really changing that. We're changing that. It's that people own their score. It's like they choose to share that score if they want. They choose to generate the score if they want. They choose which services to be included in the score, and they choose which services they want to share that score with. So it's more incentive based. It's like, yeah, you should, if you do share your score, you get access to better rates and you get access to more opportunities and better features, but you don't need to share it to use the system. There's a lot of people that can't set up bank accounts because they don't have a good enough score. There's a lot of people that can't set up bank accounts because they don't have a score. And so it's like, let's fix that system. It's like you're relying on a credit score, which is, in a sense, it's not that bad of an idea. It's a reputation score, but we can do it in a privacy preserving way, especially if we're going to bring it to DeFi. It's like, it should be a decentralized credit score. It shouldn't just be like a regular credit score.
Gotcha. So, I mean, this is obviously bringing like the automated protocols, this, private control of your credit score. This is bringing some new ideas to the table. Do you think that this really has the power to transform traditional financial systems, or is this something that will just remain separate?
I think that's an interesting question. I think we'll see, because I think that even for traditional financial systems, we're seeing that they're starting to dip their toes into DeFi in the back end. So what's happening is that, like, they will take out the loans, the assets that they have under management, and they will take those assets under management and they will deploy those assets into DeFi protocols. And then those extra returns, they keep a percentage and then they pass it off to the users, which kind of works. It works as a hybrid system because not everyone's going to be able to interact with DeFi protocols directly, especially because right now it's very difficult. You have to have a MetaMask installed or a Cyano wallet installed, and then you have to like read through all these terms and conditions. You have to understand like how everything works. So it's very, the UX and UI is like not there yet, and it's not to the point where anyone can use it. So I can see that banks might still play a role, or credit unions might still play a role, where at the end of the day, it's easier to walk into an office and sit down with someone, and that person just kind of talks you through it, and then it's like, okay, talk. You sign some paperwork, and then there's your loan, right? And then they have the money, and then they go and they loan it out in these DeFi protocols, and they just pass off a percentage to you. So that custodianship, I think that custodianship plays a big role, because I don't think that every single person is going to be able to interact with DeFi protocols directly. So I don't think it's like a pure, like, everything is going to become DeFi. I think that DeFi is going to become a huge player, and it's going to be like renewable energy, right? That it's like an alternative form of energy that a lot of purists are going to use 100%. Everyone's going to try to dabble in it. Everyone's going to try to have something, right? Like, everyone wants to have a solar panel on the roof. Everyone wants to have they would like to have a hybrid car, but sometimes like a gas car is cooler, right? So it's like, it's trade-offs. I don't think that it's going to replace traditional finance. I think that it's going to, for a lot of people, it's going to be the alternative, and it's going to be what they want. But even the traditional players are going to dip their toes into it, at least for like the added returns, and then pass off a percentage of those returns to like their consumer base.
Gotcha. That's an interesting thought. I mean, there's like, it's always interesting to think about how all these systems are going to is it possible to even connect all these systems? Because like you have to have an account on this platform, on that platform, on that point, in order to move everything from one to the other. And that quickly gets like very, very, very complicated. So I guess like this idea of a custodian who just kind of like handles all that is one way to do it. I mean, do you think there's a possibility of like someone creates an app that just kind of like sits on top of everything and makes it very easy?
I think so. I mean, right, there's a couple of things like that, right? Like that's what Wi-Fi does. Wi-Fi is like, it aggregates and it chooses, like you only lend it once, your USD once or whatever token once, you lock it in the vault, and then in the background, it's switching it back and forth between the different DeFi protocols, depending on which one has the best yield. The thing is that interacting with Wi-Fi itself is not the easiest thing, because you need a MetaMask and everything. So then one layer above that is like Binance or like Dharma, that are, you just deposit it there and then you do it in the back end. So that's like another step removed, right? And I think it's just like layers. It's like layers of the steps removed, and the more layers you remove it, the easier it gets for people, with the sacrifices of the decentralization, because there's custodianship. But like I said, I don't necessarily think that it's bad. I think it's just different people have different profiles. And I mean, there was a really good book that I read. I think it was like the Fourth Industrial Revolution, and it talks a lot about the differences between disruptive revolutions and additive revolutions. Like a disruptive revolution is like the steam engine. Is like when the steam engine came out, it just completely like replaced like anything powered by wind, because it was just like so much better, right? It's just like replacing it. Or like when cars, they replaced horses. Whereas like additive revolutions are like energy. It's like you have clean energy, but not clean energy like fossil fuels is not going away, because it's just so like widespread and it's just so convenient for people, that this new energy is not so much like a revolution on cheapness, but it's also is more like a moral revolution. And yeah, it's getting cheaper. It's getting cheaper to use it, but it is more like an additive revolution. And it's the same thing with DeFi. It's like it's in a lot of cases, it's the argument comes down that it's better for people to use, but not everyone agrees with what's better. Some people just want what's more convenient, which at this time, it's more convenient to have a custodian that handles all this stuff for you than it is for you to try to do it for yourself. It's the same thing with email. It's like we could all, if the decentralized thing was going to happen, then we would all be running our own email servers with our own PGP keys and sharing them with each other before we send anyone any emails. We don't do that. We all use Gmail. It's like if you find someone that's has running a mail server on their own basement, that is the equivalent of running a Bitcoin node in your own basement. Like no one really does that. I mean, people do that. The purists do that, and like the really techie people do that. But I don't think we can expect like every person to do that. So I think that we do need custodians.
And that's why Google rules the world. So we've got another question here coming from Alberto Blockchain. He's wondering, how does Wing interoperate between Ethereum and Ontology? I think there's a little discussion in the chat going on about whether or not Wing is integrated into Ontology. Would you mind making that clear?
Well, can you repeat that?
So the initial question was, how does Wing interoperate between Ethereum and Ontology?
Okay, well, so Wing. Okay, so the platform or the token, is it capital or is it just the word?
Between.
Okay.
I don't know. He just says between Ethereum and Ontology, though he's using the ONT ticker, so I guess the token.
Okay, well, so the Wing platform is the lending platform, so it supports both ONT and Ethereum assets, because you can take Ethereum assets and swap them into ONT Ethereum assets. Like you can turn ETH into PETH, which is pegged ETH on Ontology, and then you can loan it out. The Wing token itself can the vice versa is also doable, right? So the Wing token itself exists on Ontology and can be lent out on Ontology, can be put in the insurance pool, can be used anywhere in the Ontology network, but it can also be swapped into P-Wing, which is on the Ethereum blockchain, pegged to the value of Wing. So you can swap it over, and now you have P-Wing on the Ethereum blockchain, which can be used in the Ethereum ecosystem. So you can trade it on Uniswap. We could get that integrated into DeFi platforms. It can show up in your DeFi dashboards or your crypto dashboards, your MetaMask wallets, like your Coinbase wallet, like all the wallets that you have, your Trust wallet and all that. So it's very much, it's a token that exists both in the Ontology ecosystem and on the Ethereum ecosystem. So the platform, we're very much trying to make it interoperable so that people can use the platform whether you're like a heavy Ethereum user or a heavy Ontology user.
Yeah, I think the follow-up question to that, was I think one of their viewers is kind of getting at, is why is Ontology and Wing separate platforms? Why are they separate platforms?
What do you mean? Why are they?
Well, he's wondering he's wondering why Ontology and Wing are separate platforms. I mean, if you can use the tokens on each platform.
You mean Ontology and Ethereum are separate platforms?
No, Ontology and Wing.
Well, Wing is the lending platform, right? So Wing at its core is the smart contract itself that's launched on Ontology. And so Wing supports, asset deposits, asset withdrawals, the lending and borrowing functions. It's a smart contract.
Right.
So it's built on Ontology and running on Ontology. The reason why we deployed it on Ontology instead of Ethereum is because deploying it on Ontology gives us the closest access to the credit score. It's like native access to the credit score without needing to use any bridges. So you can have the credit score element. Also, the gas fees that are associated with it are like much, much lower. So one thing that we really wanted to aim for was the idea of inclusive DeFi. So, like not just if every transaction, every lending, every borrowing action costs $10 to $20 to first approve and then to like do the actual transaction, for most people, it's going to wipe out any interest that they've earned. So by putting it on Ontology, you make the gas fees very minuscule and you're able to get started with lending and borrowing with much, much lower fees than you would anywhere else. So that's one of the reasons why we wanted to launch it specifically on Ontology. But that being said, right, because we recognize that there's so much liquidity on Ethereum and we like the Ethereum ecosystem and we work with a lot of Ethereum-based partners and we help support the Ethereum ecosystem. That's why we have the cross-chain capability, so that people that want to say use their Ethereum assets, they can use their Ethereum assets on this platform.
Gotcha. Yeah, I hope that clears up that confusion there, Talon. I mean, so Wing is the smart contract on top of the Ontology platform, correct?
Yep.
Exactly. Cool. And yeah, I appreciate the discussion in the chat, guys. I mean, if anyone else who's watching has any questions for Erick, don't be afraid. Just write them in the chat. I'm reading the chat while we have this discussion, so I can ask him any questions directly that you guys have. Just make sure you write them down there, and we can get straight to them.
Please don't ask me about price. The whole market is down. I think everyone is feeling the pain of this. I know I'm feeling the pain in my personal portfolio. We're here to build. We're here to build, and there's a lot of cool updates coming up from all of the DeFi projects. So I wouldn't give up on DeFi from a tech perspective. I think it's some of the most interesting stuff that anyone can be working on. Or from a community perspective, right? Because there's so many ways to be involved as a non-tech person. I think, Jackson, maybe you've seen this, that like people get involved in the community discussions, they get involved in the voting, getting involved in the suggestions and the feedback. So I think that there's ways for anyone to be involved.
Yeah, I mean, I think part of it's just like being part of this cool kind of niche community. A lot of things are just like super complicated and it's really hard to get to the bottom of. But it's cool to be a part of that because this is like a frontier technologically, more or less. And yeah, I like that you responded to the price because there was a little discussion in the chat going on about that. But
I had a feeling.
Yeah, it's good that we touched on that. We've got another question coming here from Crypto Knight 3, who's asking, how would I integrate an unstoppable domain name onto a contract address?
Okay. That's very specific, but I know how to answer that. Because unstoppable domains, you can link unstoppable domains to Ontology addresses. On the because I've talked to unstoppable domains. If I called to them, they actually had my name reserved. They had, because I tried to get my name, erickpinos.crypto. It was like my public name, and it was reserved. And I was like, who got it before me? So then I messaged them, and they're like, oh no, we got it for you because we're getting it for like all the crypto people, so that no one else takes them. Oh, that's awesome. But you could bind it to your Ethereum address. You can also bind it to your ONT address, and it's actually supported within both Trust Wallet and within Onto. So if you bind your unstoppable domains address to your ONT address, you can send ONT and Wing and ONT assets to other people just by knowing their .crypto address. And the same thing with like all the other chains too. So that's really cool because they do that with a lot of different chains. And then, yeah, I mean, you could link it to a smart contract too, right? So like you could send to a smart contract.
Would you mind saying what exactly is an unstoppable domain name address?
So an unstoppable domain name address is like a domain name like something.com or something.net, but they end in .crypto, and it's a decentralized domain name. So you own it, and you can link it to your crypto addresses. So it exists as an NFT token on Ethereum, which is a non-fungible token. So it's an NFT on Ethereum, and you buy it, and then you have it, and then you can bind it to your Ethereum address, you can bind it to your ONT address, you can bind it to a bunch of different addresses, so that when you send crypto to people, you can send it to their address. You don't have to send it to like a long string of characters. You can send it to their domain, like erickpinos.crypto. If you send something to erickpinos.crypto, I will receive it. Donations always appreciated. But it's cool. It's cool because you can do that. And now when we're like paying people back and we're interacting with each other, it doesn't have to be like, oh, my address is 0xAJJ whatever, or like AUBBJ whatever. It's like my name or your name. And then you could do it with websites too. So like if you have Opera installed, which is the Opera browser, or if you install, I think there's a Chrome extension you can install, then that'll make .crypto addresses work. So you could link your website to it as well. So it's pretty cool because it's very multifaceted. I think it's a really interesting project, and they work really hard to collaborate and integrate with a lot of different platforms and services so that you can use your domain name in as many places as possible.
Yeah, that's really cool. That really simplifies things actually, which is it's just neat.
Yeah, for usability, right? Because that's a big problem. Is like every time I always have to ask someone, it's like, "What's your Ethereum address?" or "What's your address? Can you send it again?" Just to make sure, right? There's like 24 characters, and it's like, okay, make sure this is the right person, make sure this is their address. Using an unstoppable domain, I could just have like, oh, erickpinos.crypto or jackson.crypto or whatever.crypto, and then just send it. And then another cool thing is that you can unlink it and link it to something else. So if you switch addresses, you don't have to like send it out to everyone again. You can just be swapping it out in the background. It's like, okay, well now, it's kind of like your filter, right? It's like your address book following you. You don't have to like send out it's like your phone number stays with you as you get new phones. Like you don't have to like, oh, I got a new number, guys, here's my new number.
Gotcha.
We've got a chill thing for unstoppable domains. We should let them know.
Yeah, get them in here, right? Yeah. So let's see. We got a couple more questions. Ellie is wondering why your governance model and risk control mechanism are different.
I don't fully understand the question. I understand that what the terms mean. They're different. Yeah, I don't fully know how to answer that question. How the governance model and the risk control mechanism are different. The risk control mechanism being like with the liquidations and the insurance. I would say ask in the chat for like community admins to like help. I would say like read through the white paper, which explains like how the governance model works. The way that the system is designed in such a way that people can participate in the governance and that people can provide liquidity to protect, against risk. But there's an inherent risk associated with participating in the governance, participating with the ecosystem. So it all kind of balances off of each other. And if you feel like there's an imbalance, then that's something that can be voted on to be changed, because the entire thing, right, the whole thing is it's an experiment. Like it's more one of the more tested types of governance models because it's already been successfully done in the past. But at the end of the day, right, like it's all an experiment and things can be changed with regards to the governance model, with regards to the risk control mechanisms, even with the tokenomics. Like those things can be changed and voted upon by the community DAO.
Gotcha. Yeah. I mean, if you'd like to clarify your question at all, Al, just make sure you write it down in the chat, and maybe we can get you a more complete answer there. So yeah, we got another question from Alberto Blockchain, who's wondering, what is the average transaction cost on Ontology blockchain?
So the average transaction cost is about 1/6 of a US penny. So like 1/6 of a cent, which is great because like I loaded up my wallet at the beginning of last week with like a few dollars of gas, of Ontology gas. And I've been in and out of pools. I've been like swapping things around. I've been like trying every different kind of function on Wing to like make sure that everything works. And I haven't run out yet. I haven't needed to replenish it. And I'm like, wow, this is like the same cost. All of these transaction ontologies are the same cost as like one transaction on Ethereum, which is not to bash on Ethereum. Like, it's just like, this is an issue that we need to address, right? It's like, we need to be able to make these things easy for people to swap in and out of. And even outside of DeFi too, because I don't know how many of the audience members here have been getting into the NFTs and into the art, but I've been getting into the NFTs and the art and like buying art on Rarible. And like a specific issue that I've noticed is when you buy an art piece on Rarible, if the art piece is like the NFTs, if it's like a $15 NFT, like an art piece, you pay $15 for the art, and then you pay another $13 for the gas fee. And it's like 100% of the fee in gas. And it's like, wow, okay. You know, maybe I didn't really notice in DeFi because you're normally dealing with larger amounts because you're about to loan a large amount or you're about to stake a large amount. But when you're doing like these little transactions to like buy and sell art, it's like that stacks up, and that's a huge percentage. So it's like, wow, like we really do need, the scaling solutions, the cross-chain solutions. I think it's both, because I think that Ethereum can have some scaling solutions on top of it. Like I really like XDAI and I really like Matic and like the stuff that they're doing. I also think that a lot of the cross chains work out really well because what you can do is you can swap assets into different chains that have less fees and are faster, like Ontology or Polkadot. And then when you're done, like you can swap it back to Ethereum as like your main chain, right? It's just like whatever prefers, like this interoperable ecosystem.
Gotcha. We've got another question coming in from T, who's asking, how does Wing compare to Vigor on EOS? No fees, instant transactions, built-in insurance framework, user-controlled credit scores, fully decentralized governance, no bailouts, etc.
You cut out a little bit. What was the first?
Oh, sorry. His question was just, how does Wing compare to Vigor on EOS?
To what?
To Vigor on EOS, yeah.
I'm not familiar with Vigor. I assume it's a lending platform. I guess. I assume it's a DeFi platform. Yeah, I'm not familiar with Vigor, so I can't speak to it specifically. I think I've laid out like kind of the things that make Ontology different or make Wing different. And there are probably other projects that are doing very similar things. And I think like we mentioned, we like to integrate and cooperate, right? Like this is a cooperative play that we're making here, not a competitive one, because we're working with other projects and because we're doing the cross-chain solution to like enable lending across different chains. So I think like as a whole, we all push the space forward. For specifics, I think you'd have to take a look at the particular company's website and then our website, and then you can look at the different features that are laid out and see if there's any differences. Maybe the credit score, I don't know if they're doing a credit score based thing, but I think that the credit score is pretty unique. And like, there's a lot of collateralized based lending, and maybe there's even a lot of cross chain lending with like cream finance and all that. But I think the credit score based one is like less attempted. And that's something that would really stand out.
Cool. Do you have any? Sorry, I just heard myself. I don't know.
No, I don't have any closing remarks. I would just say, like, as always, I think that I think there's a lot of like DeFi hype right now, and a lot of people are kind of they see like all these people on Twitter that are like saying how much money they're making just like going in and out of these projects. Most of them are lying, but even the ones that aren't, like, I would say like not to just blindly follow them. Just do your own research and always ask questions about the projects. And I would say like try to get more involved as users than as investors, because I think the point of a lending platform is that you're loaning and borrowing. It's not so much that you're like buying the token to wait for the token value to go up. It's like to use the platform so that you get access to this financial service that normally wouldn't be available or is unfavorable, right? Like the interest rates are too high at a bank, or like you make no extra money like keeping your funds in a bank. So these are platforms now. I think it's very different from 2017. In 2017, there was a lot of ICOs. There was a lot of promises, right? So it was like there was nothing you could do except just buy the token and just wait for it to go up. But now there's a whole different way of being involved, which is not just buying the token and waiting for it to go up. It's participating in the ecosystem. It's lending and borrowing, or staking, or participating in insurance. The whole side of NFTs is getting involved in NFTs and playing the games that people have made around the NFTs. Right? There's so many more ways to be involved now than in 2017. So I would say like to not limit oneself to just speculating. Like if that's your risk tolerance, if that's your risk profile, then yeah, you can do that, because some people are traders. I'm not a trader. I like using these platforms and I like using the ecosystems. And I think that's the most exciting thing for it.
Awesome. Well, I think that just about concludes our discussion here. I want to give a huge thank you to the audience for asking all your questions today. You guys were awesome. Really great questions coming in there. And I had a pleasure interacting with you all. A big thank you to Eric for coming on the show today. Thank you, Eric.
Thank you. Appreciate it.
Cool. And for all of you watching, make sure you check out Wing. It's the link to the website's in the description below. And if you enjoyed the show, please hit that like button and subscribe to our channel so we can bring you more awesome shows like this one. All right. Take care, guys.